Hi everyone, good day, 22nd of May today, and you're looking at the New Zealand versus the Swiss franc. I've been watching this one for quite some time, and I was waiting for the right moment to strike, and we just did. We just initiated the bullish position. This is a new one, and I believe we got triggered, and I'm going to show you the technical picture. But first, let me take you to a few days ago, where price was landing exactly. Take a look at this. This is quite remarkable. And the level is 68.60. That's the mid-low level of the weekly setup that I'm going to show you in a minute. But take a look how price, after starting to build up a nice upside trend, right, coming from the lower part of the big setup, and it was making its way towards the upper part, starting with this level, 71.76. But in the middle of the way, it went for a quite an intense downside correction, quite deep, right? And it did that in a nice formation of A, B, C, right? Where wave A equals wave C, right? That's a very strong pattern. Usually when wave A equals wave C in an ABC formation, where it happens in the middle of a trend, right? It's a counter trend move that usually suggests that the downside correction is over. Now, add to that the fact that wave C ended up exactly on that spot of the 68.60, failing to break through, right, on 2 consecutive days, right there. Now, that was the moment. This opportunity was ready, was ripe. However, I was a bit hesitant because I noticed that price was kind of trapped between the 68.60 from below, that's a major symmetric key level, and the 200 daily moving average from above, right? So I decided to use that 200 daily moving average as a second layer of trigger, a second layer of trigger. So I specifically was waiting for a breakout, a daily close above the 200 daily moving average, and we just had that yesterday, right? Now, let me take you to the big picture. I think it's quite impressive when I'm talking about the trading range that you can see here running across your screen, and you can track this one all the way back to the end of 2016. So that's roughly a year and a half trading range, and we already have 3 well-established legs. Now we're trying to play out the 4th leg. In this case, we're trying to play out an upside segment within the 4th leg, because the 4th leg developed to be quite complex, in the sense that it wasn't a straight liner like the previous 3 legs. This one is very volatile. I mean, it's very, as you can see, we had the first upside segment and then very deep downside correction all the way to the 76.4, and then of course another upside segment and another deep downside correction. So I was expecting the 68.60 here to actually hold. Now obviously we came to the moment of truth here, so we'll see how it goes. It looks like the downside movement was blocked, right? The negative momentum was completely halted here. So price starting to break away from the 68.60, but it's still very early stage to determine whether we're going to have here a genuine upside reversal. In terms of the stop loss level, we're going to place it at 67.80, well below that mid-low key level, 68.60 there. And we'll take it from here, see how it goes. We're aiming at the upper part of the setup, 71.76. That's the main key level, and that's our price target. See you in the next video.